Hey YouTube, Louie here. And for those of you that are looking to invest some money, perhaps you have $10,000 or more that you're trying to get a good fixed rate of return on. Okay, so stick with me for a second here. First, I want to say I am not a stockbroker. I don't hold a license of any kind, and this is only my opinion. But I thought you may want to know if you are in the dilemma of not wanting to be in the stock market, okay, and you have all the precious metals you think you'll need, but you still have the other 90% of your assets available, and you're wondering what to do with them, but don't want to get in the stock market right now. Okay, and that does apply to some people. Not everybody should be in the market. I just want to show you what I have done recently to multiply the returns that you could get by walking into your local bank. So here is a Chase, right? There's a Chase all over the country, and we're in their CD screen. Okay, and I think these probably are a minimum of about $1,000. But if you look at the returns, let's see, let's just say you have $10,000 or more. Okay, all right, so I'm in the $10,000 column. For 1 year, a CD will pay you 0.02%. For 2 years, it will pay you 0.45. That's less than 0.5%. For 4 years, it'll pay you 0.7%. All right, so if you are going into your bank and you're opening CDs with these guys, you may want to see how I have invested my fixed income money, which has exactly the same level of safety, but pays dramatically more. Okay, so hang on if that's of interest to you. If you're not interested in fixed income, no problem. But if you do have a substantial amount of money you're looking to draw fixed income on, come on along and I'll show you how you can get that money invested in less than 5 minutes, and you never have to talk to a banker, and you don't have to be insulted by what they're offering.
And if, like me, you have watched the stock market rise and rise and rise and rise and rise, and are just kind of out for a while, perhaps based on your age, perhaps based on your risk tolerance, but if you don't want any more of that, you may be considering fixed income investments in addition to your gold and silver. And I just wanted to show you how to do this. Now, if you have walked into your local bank and said, I want a CD, they've probably, well, first they've laughed, and then they've said, if you tie it up for years and years and years, we might give you 1 point something percent. But it is ultra easy to go into Etrade. Okay, if you don't have an Etrade account, I do recommend it. They will actually pay you to open an account and transfer money in, transferring a substantial amount of money into Etrade. But what I have learned how to do recently is how to navigate the Etrade bond market. And it's really easy, and I do not recommend long-term bonds. I think that would be insanity. But as you hold on one second, I have to get out of this chart. As you look for fixed investment opportunities and you're willing to take, around 2% for a risk-free return, in other words, you've chosen to get out of the market for whatever reason, like I have, but I'm 60 years old, mind you. But you've chosen to get out of the market and you're looking for a steady return with very little risk, and you're insulted by the returns that your bank offers you, and you're avoiding other opportunities that may be more speculative. Take a look at how to purchase a bond. You can do this in about 5 minutes. Once you're in the account, as I presume you've transferred some money in, E-Trade has paid you a nice big check, $500, $1,000, $2,000. You've got money to to buy, you click the bond screen in the trading screen, and you just go through what type of investment you would like. Now you can go for U.S. Treasuries at 2.3%. That's a 1-year duration. You could go out to 2-year U.S. Treasuries, okay? And those are all backed by the faith of the government. You can go to CDs and get 2.2 to 2.75. All right. If you want a treasury, okay, fine. I'm going to go into the CDs really quickly because that is the thing that most people kind of go to their bank looking for, and they are insulted and amazed at the rates that are offered to them. But if you want a 1-year CD, you just click into the 1-year CDs. You look at the various banks offering 1-year CDs with a 2.25 coupon. Look for one that, sometimes you may want to drop down a little bit in terms of the yield to get a bank that you're familiar with. Let's see. Here's Goldman Sachs. Let's say you wanted to buy this Goldman Sachs bond here. Just click on that. The coupon for this is 2.15. All right, there are the details. You probably can't read this, but it tells you that the duration is 1 year from June 13th, 18 to June 13th, 19. You go into the buy screen over here. The coupon is 2.15. So the moment you buy this, you're earning 2.15%. And you're locked up for a year, okay? You can terminate these early, but if you keep durations nice and short and you ladder them, in this case, this is a 1-year CD, you click the buy button, and then this screen will come up, all right? And it just basically says how many of these $1,000 CDs do you want? Sometimes there is a minimum, 10,000 in this case. So let's see, $10,000, okay, Goldman Sachs CD, and you basically preview your order. You're placing a brokered CD order, must access the CD disclosure statement. So what then you do is you have accessed the disclosures, which you should click on and read. But if you click that button, all right, and then click a preview, it will say your order is ready to place. All right, it's got the CUSIP number, tells you what you're buying. It's a firm order, $100 face, and let's see, principal $10,000. But that is how you do a CD order. I'm going to cancel that. I'm going to go back into the bond screen and do a U.S. Treasury. And again, if you keep these treasuries in the 1-year zone, you can get anywhere from 2.3, 2.2, depending on what type of T-note you want. These are often bigger buys. A 2.3% yield T-note with a 1-year maturity, and you don't sell it, you don't trade it out, although you can at a loss. But if you don't trade it out, you let it mature, you really can't lose your money. All right, I'm not a stock advisor, and I'm not giving stock advice. I'm just showing you how to avoid your local bank and the creepy, crummy, grubby group there that want to pay you 1% or lock you up for 5 years. You can get any duration you like in T-notes, inflation-adjusted notes. You can go to corporates. I find that the corporates are treacherous, and that you do take stock risks as well when you buy these corporate notes. But again, if you hold them to maturity and they're not called, you could potentially extend your returns. And you may want municipals if you want to avoid tax. That's another way to go, but that's a whole nother ball of wax. But for the most part, I wanted to show you how to obtain, with a matter of keystrokes, a 2.2 up to maybe even a 3% CD yield, and check it out. Okay, food for thought. Feel free to ask any questions you might have, but you will be earning money guaranteed on your money.